What is up, everybody? Logan here again with another video. Today I'm joined by one of the Discord members, Vance Lorne. His name's Robert. He has this awesome strategy that he wants to show us. He's been telling me a little bit about it and how he plays it on SPX. He's been chatting with a lot of the members and they wanted him to make a video on it. And I want to learn as well. You know, it's really cool to hear other traders' perspectives. So I appreciate you coming on, Vance.
Hey, not a problem, Logan. How you doing today?
I'm doing great. How you doing? Market's
Doing pretty
selling a little
good.
bit.
Yeah, it's selling off a little bit right now, but it's still a green day for me, so it's a
Yeah.
good day.
Yeah, still a green day for me too. Cool. Well, I'm really excited, and I've been playing a lot of SPX stuff. I know you've been chatting about your strategy that you've been running, and I'd love to hear more about it. And when you implement it, how you implement it, and kind of your plan. I would say over the next 5 years with it.
Absolutely. So, besides for just the normal credit spreads that I like to run,
Mm-hmm.
the strategy that I've kind of come up with is running a broken wing butterfly on SPY or SPX, and I started the night before, usually right before the close of the market day for the following day's expiration. So like I'll do like a Friday for a Monday, I'll do it on Tuesday night for a Wednesday,
Mm-hmm.
Thursday night for Friday. And one of the reasons why I'll do it is right at the end of the night, at the end before market close, is what I find is that in the morning, kind of regardless of direction, there's a massive drop off of theta, which of course then causes the options to lose extrinsic value.
Mm-hmm.
And as well as if we get price action that moves in the direction we want, what you can do is you can actually close out the spread first thing in the morning, usually within an hour or two, and you basically capture almost the full value of the spread. And because of the way it's set up, which you'll see in a minute, you actually leave the butterfly part of the spread still on, which means that if then SPY or SPX or really whatever underlying you're using
Mm-hmm.
moves then in that direction, you actually have almost like a lotto ticket where you can get a big gain if it ends up underneath your butterfly tent. So yeah, so normally what I'm going to do is it's a little bit early on Tuesday to actually run it for Wednesday.
Mm-hmm.
I normally don't want to get into it till closer to like 3:15 Eastern time, 3:30, depending on how the market's going. We're in a little bit of a downtrend right now with SPX,
Mm-hmm.
so I definitely don't want to put it on too early because if I put it on right now and then the position totally moves against me,
Mm-hmm.
I could get caught to where like I'm underneath it to start.
Right.
But what I normally look to do is I'm real big in mathematics and deviation, so I know that SPX on a normal course of any day is only going to move approximately 1%.
Mm-hmm.
That's the normal move, whether it be +1 or -1%, which for SPX is approximately right now 41 and a half points.
Mm-hmm.
So if I'm in one standard deviation move of that, I like to be 1 to 1.5, so approximately 40 to 60 points out. Sometimes the deltas will line up for that, sometimes they won't.
Mm-hmm.
So like right now, if I were to go 40 to 60 points out, I'm looking somewhere in the the anywhere from the 4100 to the 4180 range.
Mm-hmm.
So basically what you're going to do to set up this play, and you can see the delta 16 is kind of in the middle there at 4190.
Yep.
What you're going to do is you're going to sell 2 puts at that range. And then what you're going to do is you're going to go 1 strike closer to the money. So in this case, it'd be the 40.95.
Mm-hmm.
And I'm going to buy 1 strike there.
Mm-hmm.
And then I'm going to go up 2 strikes lower, 2 strikes, not 1. And I'm going to buy that put as well.
Okay.
And so what you're doing is you're actually buying a total of 4 options. And none of them are in the money. And what that's going to do is it's going to set up a risk analysis that looks like this. Zoom into the right range. And what you're going to see is right now, the theoreticals say that I have a 93% chance of winning on this play.
Mm-hmm.
And if I were to set it up right now, as this bounces around, I'm going to get, right now it's like 30, 40 credit. But you're going to get somewhere in the range of 30 to 50 credit, depending upon the direction that SPX is moving when you set it up,
Mm-hmm.
and you're going to put down about $500 in capital to run this play. So from a risk to reward, it's very similar to what a MAS play would be.
Mm-hmm.
The percentages are almost the same. And what you can see when you look in the risk graph is you've got this nice green triangle right here, and then you've got this green runway strip, because essentially it's still almost like a put credit spread.
Mm-hmm.
So as long as it stays above my lowest strike, which is 40.85, this will make money.
Okay.
And if it does happen to fall down under here and it ends underneath this triangle, you could get up to $540.
Wow.
So now the real awesome part about this play is that once you set it up, first thing in the morning, what we tend to have is within the first hour, we have a lot of theta burn off.
Mm-hmm.
And this play works in two ways. It can work off of theta burn off. It can also work on price direction. So SPY on some days does have pretty wild swings.
Mm-hmm.
You get a 20 points up, and then it'll come back and end the day 5 points below, or sometimes right where it started.
Mm-hmm.
Sometimes it goes up 20 points and goes down 40 points. It just depends on the nature of the other stocks in the S&P. So what happens with this play is once tomorrow morning hits, if SPY moves in the direction we want, which is a higher value, you can let this play expire and just collect the money.
Mm.
Or what you can do is, and it's really hard to show in the risk graph right now, but what you can do is once at some point during the day tomorrow, this 40.80 put that I've bought is actually going to be worth almost nothing.
Mm-hmm.
And I can actually sell this put. I can close the 40.80 put, and I can buy the 40.85 put. And what that's going to do is it's actually going to give me, I'm going to buy it back for a total of $5 in credit.
Mm-hmm.
And what that's going to do is it's actually going to take all my risk off the board at that point. But it's going to leave the butterfly in place. It's going to leave this tent in place, which means then that if SPY were to completely retract and fall underneath the tent, I have a lotto ticket.
Wow. Okay.
Or if you want to, you can just leave it on the board and let it expire for nothing.
Mm-hmm.
But I kind of came up with this play while originally running earnings. And I would do the same thing with, like with whatever underlying was out there. I'd be like, okay, I think the earnings is going to go up or down. And I'd set the butterfly in case it didn't move a whole lot. I could capture that value. And then if it did move in the direction I wanted, I would have all that runway where I wouldn't lose any money per se.
Okay. Wow, that's fantastic. Like you said, you have your little lottery spot right there.
Right.
If it happens to fall right down there, that's awesome.
Exactly. The other really nice thing about this play is that oftentimes what's going to happen is you can have a situation where even though the price is falling towards you,
Mm-hmm.
Sometimes what will happen is your theoretical, your options value will actually increase instead of decrease, and you can actually close this play out for a credit first thing in the morning within an hour or two, and actually you got in for a credit and you can get out for a credit.
Wow.
So oftentimes what I'll do is I'll set this and then I'll immediately set a close order for like a $10 credit, because that'll pay back my commissions, and I'll just set it. And if it triggers, good for me. I've made all my money and I got paid for the play.
Mm-hmm.
I effectively didn't pay anything in commission, so to speak, because my extra credit tomorrow to close it does it. Or if not, during the day, I'll just do that change like this during the day. I'll close this and reopen this one for a $5 play,
Mm-hmm.
and then I will just close it out.
Wow, that's fantastic.
Now, there is a downside to the play, which is unlike a normal spread, it's a little bit more difficult to manage it if it's moving against you,
Mm-hmm.
because it's already a 4-piece option. So if you want to roll it, you kind of have to pace mail it, where you have to roll one of the puts and one of the calls to a future date, and then roll the other put and the other call to the same future date. So you kind of have to do it in 2 separate pieces. You can't do it all in move.
Yeah, one more
But
bull.
what I find is actually the best defense is if SPY is moving that much against me. And again, what's nice about this play is when SPY moves against you, it's actually going to move through this. It has to go through the lotto ticket before it completely blows through your spread.
Mm-hmm.
So what I find is a really good defense mechanism actually is if you have to close it, and you have to be, it's a little bit capital intensive,
Mm-hmm.
but one of the best ways to defend it is actually to just close the sold puts. You just buy them back. You're going to pay a little bit more, but what ends up happening is if you close these two puts, the ones that you sold, and SPY continues to move against you, it's two puts that you've bought two puts.
Yeah.
So if SPY were to continue to blow past you, all of a sudden, if you were here, right, and you had purchased these two puts at the 40.90 range.
Yep.
Well, now all of a sudden it drops to 40.70. You're in a position where you're banking almost $3,000 in money. Like that's an even better lotto ticket.
Yeah. Wow.
So that's what's really nice about this position is on those black swan type days, especially if like you kind of see in the morning that you're just expecting it, you can just buy back the two sold puts and just leave the ones you bought on and just let SPY continue to decay, and it just rolls into the green.
Wow. Yeah, that's what a setup. My mind's being opened right now because just closing those sell strikes, I would not have thought of that. I would have thought close the whole position and just move on.
Right.
So yeah, and like the only other thing, right? Like you close the sell strikes and then SPY starts or SPX starts to rise right when you close them, but even then you could just close the entire position. So
right.
That's fantastic.
And
like you said, the chances of that actually happening too.
Exactly.
Yeah. So
exactly. And what's nice about this position is that you can actually do a couple other tricky things.
mm-hmm.
So you can actually make this wider. You don't have to do one back here. You can go up higher.
Okay.
And what that's going to do is it's going to increase the length of your triangle a little bit. You have to put more money down. You obviously get a little bit more credit out of it.
Mm-hmm.
It also increases your maximum that you get. One of the other things you can do is you can actually, instead of doing that setup where you do the 1, 2, 1,
yep.
You can actually do 1,000-point spread.
Okay.
And set it up like this, where you have one, and then you buy one, skip a strike, sell two, and then buy another one. You're still at your same $500 buying power because of the way it works out.
Mm-hmm.
You don't get as much credit, but what you get is you get this trapezoid shaped. Risk reward profile.
Okay.
So instead of having a spike, you actually have about an 8-point runway where you actually can get that maximum $500 credit.
Wow.
Because you're going to get your max credit if the underlying hits one of the sold puts,
mm-hmm.
but not drops beneath the 2
mm-hmm.
or goes above the 1. That's where you're going to get your maximum, is right at those 2 sold puts.
Wow.
So that's a different way you can run this as well.
And that's, a wider, of course it's more collateral, but if you think about
right.
it.
Oh, it's actually no more collateral. It's
mm-hmm.
just less credit.
Less credit. Okay.
Yeah. So your collateral is still only $500 minus the credit you receive.
Okay. Yep. Makes sense.
So, because basically the only thing you're going to pay collateral on is however many strikes you skip.
Yep. Okay.
So if you skip 3 strikes, you're going to pay $1,500 in collateral. If you skip 1 strike, it's just $500. So this skip range is all that's going to determine what you pay.
And that's to break that down in my head as I implement this. I totally get what you're saying, but like mentally, right? I got the credit spread mindset where I'm like, oh,
right.
I see that strike from that strike. That looks like 1,000. No, it's actually the difference between. Okay.
Exactly.
Perfect.
And what's cool is you can do this on SPY. Like you could do this in Robinhood on SPY. You don't have to do it on an SPX. It's a little bit harder because the price ranges in SPY obviously are 1/10 that of SPX.
Right.
But you could still do the exact same setup and go back 3 or 4 points. And so here you are. Here's a $300. This is a little bit close.
Yeah.
Let's go up to the 403 range, and we're going 2 standard deviations back.
I don't know if we're getting enough
That's
credit there.
Yeah, probably not on that one. But so I mean, on Robinhood you could do this. Same thing. You're getting $4 or $5 on a $200 lay down, which isn't bad. It's not great, but it's doable. And again, what's nice is you have that really nice graph. Oops, I moved a strike there. Where you can, I obviously did something there, where you can actually get a decent amount of money if you hit that bullseye target, which is nice.
How often do you hit the bullseye?
Honestly, as weird as it sounds,
almost?
you almost don't want to, because in a perfect world, what's going to happen is I'm going to set this up, for tomorrow.
Mm-hmm.
And in a perfect world, what's going to happen is SPY, SPX, whatever it is, it's just going to go up 30 or 40 points.
Mm-hmm.
And I'm either going to let this expire, or I'm going to do that little trick where I can close it and make it a free roll.
Mm-hmm.
In a perfect world, that's what's going to happen.
Okay.
That way I get my risk off the table and I don't have to worry about it. Mm-hmm. I had a situation a couple of weeks ago where I was just in a gambling mood for the day, and SPX was just kind of trickling closer, and it did end up in the day, and I hit it right around like the $80 mark. Mm-hmm. So it hit between the 2 strikes. I didn't make a whole ton of money, but I didn't lose a whole bunch. I didn't lose any money on the day. Mm-hmm. So, but it landed right around, like right about here, a few dollars into it, which was was a nice little extra bonus.
Definitely.
But at the same time, it's nearing the end of the day, and whenever the value of your puts are just going crazy. Mm-hmm. Because you get that last minute end of the day gamma, and the prices are just going crazy. And if it SPX has a tendency to move a good 10-15 points at the end of the day pretty much every day. Mm-hmm. Like I wouldn't be surprised if starting around 345 today, we're minus 14 right now. I wouldn't be surprised if we didn't end the day at anywhere between minus 30 and plus 5, because it just tends to just boom up and down so much at the end of the day. But that's always a possibility. Mm-hmm. So.
Oh, that's awesome. And is there any specific, anything in specific that you take a look at right before entering the trade, or you just make sure to play outside the standard deviation range, and that's kind of just your ballpark feel?
For this one here, I tend to just do it just on the numbers, because you're doing it the night before. Right. So it's really hard to, if it's really hard to gauge what tomorrow's going to come. Right. Obviously, I check the calendars. I look and see if there's anything crazy. Like if Jay Powell's going to speak at 8 o'clock in the morning about something that I think the market's going to go crazy on, I might not put this position on. I might take the day off entirely. Yeah. At least going into it. But as a general rule, I'm a big believer that if we have, usually when we have one big heavy negative day, mm-hmm. especially if it's more than 1.5%, we generally don't have that the second day in a row. Very rarely do you have those 2 or 3 days in a row, short of like a black swan, like COVID-19, 9/11 type event. Yeah. Usually the market will have some degree of recovery. So if you have a heavy loss type day, like if we're down 30 or 40 points going in today, that's actually one of my favorite times to put this on, because as it's falling, it's going to make all these puts values increase. Mm-hmm. And so sometimes you can get into that position, and get into that, 40 or 50 points away, and get into it where you're going to get $65 in credit. Whereas on the days where SPY is just going to the moon, it's hard to get 30 or 40 credit in that same range, you sometimes are stuck in 15 to 20 because it's just trailing away from you, and it's just sucking the value out of the puts
And then
as fast as you're putting them up.
the chances of having a green day the next day
Right.
are lower
Exactly.
because you've
Exactly.
already had such a big green day. That's exactly how I think when I'm putting on my condors,
Hmm.
or any sort of like a put spread, like the one that we took last week in the group at the 388, 384s for this week when the VIX
Right.
spiked to 28 and we took them, and they're sitting at almost 100% right now. And then by like the second day, they're already at like 70% just
Right.
because of that, like
Exactly.
market was falling. The SPY went from 424 down to like 405, and then we opened them, and it's like the chances that it drops another 20 points after falling 20 points 3 days in a row, very low.
Exactly. Exactly. So, um, so the other strategy that I also do, and I know a couple of the other people in the group do it, which is also a butterfly, which is a great strategy. It's capital intensive. I'm not gonna lie about it,
Mm-hmm.
but that's to do a 0 day to expiration iron butterfly,
Mm-hmm.
which is just a beast, and it is such a profitable machine, if the setup is there.
Mm-hmm.
So what I like to do is I like to look at the New York Stock Exchange advancing issues,
Mm-hmm.
and what I'm looking for is I do the 5 minute candles, and I'm looking for something in the morning where with the first 3 to 4 candles are all pretty even. We're not, you might see this, but we're kind of establishing a range.
Mm-hmm.
And then what I'm going to do for that is I'm going to set up a single iron butterfly, which is basically, it's like having a put debit spread and
Mm-hmm.
a call debit spread together. But you're going to go with whatever the strike price is, as close as you can get to the strike price. You can go above or below; it doesn't really matter.
Mm-hmm.
Just try to get as close to the current strike price as possible, and you're going to go 50 points out in either direction. So you're going to go 50 points above, and you're going to buy that call. Then you're going to go 50 points below, and you're going to buy that put. Oops. And what you're going to do is you're going to set up this. And it's essentially what you're looking for. And since we're closer to 4150, if I were doing this for real, I'd actually bop that down
Mm-hmm.
and move that just like that. And you're going to put out approximately $2,500 in collateral. But this is a position to where you want to open it within the first, again, after the morning shakeout,
Yeah.
15, 25 minutes into the day. But if you're trading sideways like you are today, we're $13 from where we started. You can see that $13 from where we started is well within inside of this green, this
Oh
green
yeah.
zone. And what's happening is theta is just going to burn off. And you can see our max profit is $2,500. It's a 50-50
Jeez.
spread. I mean,
Yeah.
you're laying around $5,000 of collateral, but you're collecting $5,000 back, or $2,500 back.
2,500. Okay.
So really, if you're trading sideways, you can just let this sit here for most of the day. And what's going to end up happening is it's going to burn off the collateral. They'll burn off the theta within the first few hours.
Okay.
Some people like to do it for like they get 100, 150 bucks, so they're out. I know that Ice Bear posted a lot in the chat.
Mm-hmm.
If you sit around and wait till like 3 o'clock, and then a sideways day like today, you could do it with relatively little stress.
Mm-hmm.
You could make $1,000 off this play.
Wow.
And it's not something, this is also a play that like you've got to pay attention to it. You definitely have to set up an alert, at like maybe 20 points out either way. Because if it starts to really move, you might have to get out of it. But as long as the market doesn't have like a massive up or down swing,
Mm-hmm.
or some sort of crazy event that causes volatility to rise or fall, even within a couple hours, you're going to make a few $100 on the play.
Wow.
And that's what's so awesome about this. I love butterflies. Butterflies to me are just, they're almost like the
Bread and
like the
butter.
cheat. Yeah, they're the bread and butter. They're like the cheat codes of option plays, because
Yeah.
if you apply them smart, you can make such a vast amount of money uh, in a relatively less stressful environment, and you don't have to worry about you don't have to worry about a week's worth of risk when hey, I'm setting it up tonight, you know, and by tomorrow morning by 11 o'clock I'm going to pull it. You know, it's just you're not sitting here waiting for a week. Well, what's going to happen today? What happens when Wednesday if this happens or that? If the night before something crazy is going to happen, you just take the
Yep.
day off. You don't trade it that day.
So, and the one question I had for you, I would say would be what type of VIX environment is, and we're probably going to get a lot of questions on it. And I would say this is going to be one of them. So we'll just get this out of the way. What VIX environment do you like to do this the most in? Is there like a range um, that you like to, I know like calendars and credit spreads both have different,
Right.
you know,
So with the iron fly, it's actually with this particular strategy right here that we have on the screen,
mm-hmm,
it's actually kind of interesting because um, in a situation where you have high VIX, you probably have higher volatility.
mm-hmm,
So even though you're going to get more potential premium, the odds of it having that one day where it just kind of goes bonkers
mm-hmm,
is probably too high, because you only end up with about with whatever your credit is, you're only getting that in either direction. So you're only getting 25 points in either direction. So yeah, you might get a little bit more in the premium up front, but if it starts blowing 30 or 40 points in either direction, you're going to end up in the red pretty quickly.
yeah,
So a medium to high, a medium VIX is probably the best. Nothing too high or too low.
okay,
Even with a low VIX, the reality of it is that there's so much premium built into this, because you're selling an at the money call and an at the money put.
mm-hmm,
So there's so much extrinsic value built into this. Like if I pull up extrinsic on here, like even this, I mean, this would be for tomorrow, but there's still $1,400
1400.
and yeah, like $1,400 to $1,500 on either side, and
Wow.
most of this is going to be here tomorrow. Like most of this will still be here first thing in the morning. I would say that within the first 30 minutes of the day, by the time we put this on, this would still be at 1,300 and probably 1,400 respectively. And so it's so rich because you're selling those at the money calls and puts.
Okay.
And one of them is actually going to be in the money at all times, no matter what happens, unless it sits right at 41.50. Something's in the money, so you're always going to have that value there.
Wow, that's fantastic. Yeah,
With
that's the strategy's awesome.
the broken wing butterfly, kind of a similar setup. I would, a higher VIX obviously means a lot more premium for the position,
Mm-hmm.
which is always good. But then you also have to run the risk of, is it going to hightail it, up or down? And I don't trust deltas in Thinkorswim or Tasty for like what I call like 0.5 data expiration, because you're opening it right before the night,
Mm-hmm.
or even 0 day expiration. I don't trust the deltas as much. In the money and the touch, I find them to be a little bit they're just not as accurate, I find. Because there's days where you'll see the delta is a 0.5, and the touch percentage is like 2%, and all of a sudden now 20 minutes later you're in the money,
Okay.
just because all it takes is one event to swing it down towards us,
Yeah.
and you're spanked. So that's why I like the idea, the percentage idea is that the market on most days, we're talking 7 days out of 10, 70% of the time,
Yeah.
is going to move less than 1%.
Yeah.
So if you just look for that 1 to 1.5% mark, you just take the underlying, multiply it by 1% or 1.5%. In this case, again, it'd be somewhere between 41 and like 63, and just kind of find that that spot where you're getting a decent amount of money. The deltas there are going to line up for the most part. Like here, we're at a 50 points, so we're right in that range,
Yep.
and you're collecting $45 on this, which isn't bad, and you set it up, you let it run, you don't chase it, if you're, and I should have brought that up earlier. So like I also will set it up, and I don't keep like Xing out of the trade to try to get a specific credit. If
Mm-hmm.
I can't get at least like $25 credit on it, I'm not going to run the play because there's just not enough meat on the bones
Mm-hmm.
for the risk profile. I'm on a 1 day play where it can turn against you relatively quickly. Um, I don't want, and you don't have a lot of time for recovery
Mm-hmm.
specifically. I think $20, $500 to make 20 just isn't enough. It's like picking up pennies in front of a steamroller.
Mm-hmm.
So I'm trying to aim for at least 35 to $40 or more in credit. But just you set your target, and you send it, and in a perfect world, what's going to happen is it's going to bounce towards you, maybe just a touch.
Mm-hmm.
Or a market maker or somebody will meet you halfway, and they'll pick up the spread. And in a perfect world, you're going to get $50 credit on it. You're going to get a 10% return.
Mm-hmm.
And you can't, for a 1 day trade, 10% on it, you can't argue with that.
No.
That's a juicy piece of meat right there.
Yeah, you can't beat that, man. 10% overnight. It's fantastic. So you plan on opening one today, just not yet.
Yeah, I'm going to see how things go. I kind of like this position here because again, we're about 50 points out from where the market's at right now.
Mm-hmm.
And if I can get in for at 45, $50 in credit, I think that I think that'd be a good play. In fact, I'll set it up for 50, and I'll probably key into it probably closer to 330,
Okay.
and just see if I can get filled, and if I can, I can. If I can't, then I can't. But
Yeah, move
you
on to
know,
the next trade.
yep,
You can do it
don't
on Thursday into Friday.
exactly. I don't force it.
Yeah.
I think trying to force trade sometimes is what gets some of us into trouble. Is we're so bent on,
Yep.
I want to get into that trade, and I want to get into trade at no matter the cost or the price, and then there's a reason why we couldn't get filled without tweaking it.
Yeah, and that's what beats most traders up, especially on any sort of 0 days play or 1 day expiration, because for anybody listening, you have for the rest of your life the chance to do it the day after, right? We have 3
Yep,
expirations on a Monday, Wednesday, Friday. If you miss a Tuesday entry, guess what? You got Thursday, just do it then.
exactly,
And you're already in the market with money that you don't absolutely need today. So what's wrong with waiting an extra day?
exactly.
So that's kind of, that's the proper mindset for it. And I appreciate you sharing all this knowledge. Is there anything else you wanted to touch on in this one?
Not that I can think of, unless you had any other specific questions.
No, I think you touched on everything really well, between like max profit, your max loss, right? Like the risk, and then other ways to defend this. Like if you don't want to roll it out and you just choose to close the sell strikes and hold the buy strikes, right? And if it
Right,
continues to drop, hey, guess what? And like you said, that you don't even want that to happen. Sometimes it does. I mean, let's say you're
right.
rocking with a 93% chance on this trade is what it looks like to me, right? We're at 6% chance of in the money.
Yeah.
So we're rocking a 93% chance roughly on this trade being successful already just by opening it now in this current environment. And like you said, the chances of it going against you, right? So statistically, you got the 93% chance of winning. And if it goes against you, like that other 7%, you have multiple ways to defend it, which is either
Hmm.
rolling it, closing the position, or just closing the sells and letting the buys go. All right. Well, I appreciate you coming on, Vance, for real. I appreciate all the knowledge you share with the Discord as well. And just everything, just being open to coming on to the channel, making a video, and joining all the other traders. And, it looks like the market's really took a downturn since earlier when we were showing the position. So I'm curious to see when you take it and what you're looking for there too. So I'm really excited to see how that goes, but I really appreciate you coming on today. If you guys have yet to leave a like, subscribe, and comment on this video, it'd mean a ton to me. And Vance, I appreciate you for coming on, man.
You're not a problem. Anytime, Logan.
Awesome. Well, that's going to be everything for us. I hope you guys have a great rest of your day, and let's hope it's green tomorrow.